A diversified fund is a combination of different asset classes and put together with each asset class fulfilling a particular part of the portfolio to serve any investor regardless of their age or their time frame for investing or their ability to suffer through the ups and downs in the volatile markets we will always have around the world. And each component of the diversified fund is put into that fund for a specific reason. There's a conservative fund, a balanced fund and a growth fund. The conservative fund is going to be made up mostly of cash and bonds, those more defensive and reliable income streams, with a much smaller amount of the growth asset classes, the equities. At the other end of the spectrum is going to be the growth fund, which is nearly all of it is made up of those shares and owning companies, that growth potential to do well from those companies over the long term, with a much smaller allocation to cash and bonds. And the balanced fund sits sort of in the middle, around 60% in the growth asset classes and 40% in those defensive asset classes of cash and bonds. An older investor might often have less of their earnings life ahead of them and possibly a bigger savings nest, so therefore their appetite and ability to take on some extra volatility or price swings is less, so they would be more of their portfolio would be in those defensive asset classes, bonds, cash, and still some exposure to share markets and to companies that are growing their earnings and share prices, but less than a younger person who might be at the start of their career and their potential for earning and saving, so they're able to buy mostly equities and shares and a lot less of those defensive asset classes. So one of our points of difference would be that we're an active manager, and that does mean we've got the ability to have those specialists in their given asset class. Again, looking for the ideal investments. We're not trying to buy the entire market. That would involve investing in thousands and thousands of companies around the world. We're looking to try and find the best ones there are, and that's done again within those asset classes. So that's active management. Diversified funds are effectively, think of them as building blocks. Within each building blocks, and the asset classes, or that we've sort of separated them into, are the building blocks. Think about sort of Australasian equities and then global equities. So we'll have specialists for each of those asset classes. We've got a team here at Nikko who just looks at Australasian equities and sort of trying to pick the best companies with the best potential for our investors. Global equities, we partner up with what we think are some of the best managers in the world to do the same exercise. So specialists sort of all around the world looking for those ideal companies, and it's the same for the defensive part of the portfolio. Cash and bonds locally managed by our team here in Auckland, and again global bonds, an external manager there doing the same exercise. So that managing the diversified funds, you're sort of sitting across this combination of building blocks, making sure that allocation is always optimal for those, again regardless of what all the different investors what they're after and what they need for their savings. It's a well thought out, disciplined investment approach, long-term approach. We're not talking about people day trading or going in and out of companies, trying to find companies you want to own or lend to for a long time, always with the ability to change your mind, but it's that long-term view. Is this a sort of business that I want to own or lend to? And that sort of a combination of experienced folk who have done the same thing very well for a number of years, that gives us the confidence that that's a sort of repeatable and appropriate process going forward. We've got what we think are some of the best specialists in each of those asset classes. Experienced investors with a disciplined investment approach that's been successful for a number of years and that we have high confidence in going forward. And that combination of those specialists within their own asset class, within their own universe of opportunities, putting those together, we can form a portfolio that's going to be greater than the sum of those parts.